Also wanted to get a sense on the shares of gold financing companies, Mayuresh, with this RBI publishing draft rules for loans against gold. What is it that one's approach should be? We have seen in the past, how RBI has continued to keep their focus on this space, cautioned against, probably too much of lending happening, unsecured lending as well. At what rates do they do this? So a lot of these rules will bring in a lot of clarity for these financiers, but will it mean some dampening impact, at least for the near term, despite gold prices being at an all-time high?
Possibly, and I think one must really wait what RBI comes out with, right? There is no harm. There is no point in terms of presuming or having any preemptive assumptions related to the same. Obviously, Muthoot as an entity has a significant exposure to gold as a portfolio. If I'm not mistaken, more than 95%. The Manappuram is around 50% odd. IIFL Finance is significantly lesser at 21% odd. Now, looking at the guidelines, if you probably look, Sakshi, in terms of the entry or the origination LTV and the exit LTV, because gold prices have moved significantly higher, the exit LTV and the original LTV, there is a huge gap that has probably formed. That probably makes us believe that with RBI clamping down on unsecured lending a few months back, I think a lot of investors probably resorted to gold financing as an option to probably get their advances in place. And that is where the fear of RBI is, that if this continues for a longevity of time, does this mean that the quality of borrower who is coming to gold financing companies, and if he is not able to repay, create some element of stress within the system itself? I think that would be the thinking, in my opinion, what the regulator is probably looking at. And therefore, I think one must really wait out for the final guidelines to come through. No harm. I think once it comes through, you can make a structured decision in terms of, as we spoke, which companies probably get affected the most or the least, and then probably take it.
Okay. Kunal, gold prices at an all-time high internationally, $200 an ounce is what we are seeing amidst the growing uncertainty, plus things changing regulatory as far as the gold finances are concerned. Would you bet big rather on the jewellery stocks like a Titan or a Senco at this point in time rather than looking at gold financiers? How would you really navigate the fresh challenges?
Well, definitely I'll be looking after gold jewellery stock only because the way all the stock has been trading on a daily chart, I think we may see a further upside momentum in this counter. And let's talk on this Titan, the way Titan has been trading on its daily chart. If you talk about hourly chart, stock has been trading over its 100 and 200 MA, and on daily chart, recently stock is trying to give a breakout of its 3190 level, trading at 3228. One can get into the stock at present level. If you talk about upper side target, then first target comes at 3275, and if stock breaks this level, then further upside would be there up to the level of 3400. So yes, definitely risk reward is in favor for creating a long position. Downside strong support comes at 3150. So Titan looks very attractive amongst other gold jewellery counters.
If you like the video, do like, comment, share and subscribe.